Good afternoon, everybody. Sorry about the delay. I'm stuffing down some popcorn and got a kernel stuck in my throat. All right, let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. So I kept a little bit of that Tesla. Average price is below 140. So we'll see what that thing can do. I don't like the company at all. I think it's expensive even here, but the selling is getting a little silly. Nike gapping up here. Nike trading higher on earnings. FedEx is down small from where it closed, almost pretty much flat. Nike initially printing up, coming back down a little bit. Revenue beat. Selling off now. Stock went red. Margin beat. China was a miss. China revenue. So far, it doesn't look bad. Need to see the guidance, I guess. Would really like to see Nike up. Nike's almost always up on earnings reports. It's one of those couple of companies that I feel like almost always goes up on every earnings report, but it's down because of declining gross margins. All right, well, down small for the moment. We'll see where the dust settles on that one. So let's jump into things. I can't believe that we only closed up 0.1% in the S&P. Like seriously. It actually felt like a much bigger day to me, but that's because we nailed the bottom this morning so well. We just did not get any follow-through. 0.1%. This is our first green day, and who knows how long. 0.1%. And Q's unched? Looks like the Q's close exactly unchanged, like to the penny. Let me see this. 379.73. No, we closed green. We closed green in the Q's, but we are. Wait, hold on. Never mind. That's spies. I'm like, I'd be spellbound if we had an exact unchanged close, because I feel like I've seen that 2 times ever in my career, where it's like unclosed unchanged to the penny at the end of the day. There's always some change. 269.84, 269.84 yesterday, and no, 269.57. So it is a red day for the Qs. So still not even a green day for the Qs. And the IWM closed up. Russell here's up 0.5%. So, yeah, I mean, like, I don't know. I'm happy and disappointed at the same time. Like, I feel like we crushed that low today. I mean, it was just like max conviction long as the market was basically making lows right here. And we kind of hung in with the trade. There were some names that gave us some really good setups. I'm just going to the IWM because the IWM performed best off of it. Russell led us up, which is exactly what we want. This momentum move here was fantastic. Things are looking really good, and the IWM did close up okay, up 0.5%. Spies here, same thing, off these kind of 2 dojis in a row, giving a pretty nice bounce. Q's probably weakest, but also off the low here, just a really nice bounce from 267 to 271, and that's it. That's it. 10:30 was it. 10:30 was the end of the follow-through. I really thought we were going to get more out of the market than this. I got to be honest. So it's like I'm super pumped at like the max conviction long for the retracement trade at lows, the timing of it, that we were sticking with it. Like we discussed earlier, it could have been difficult, and you easily could have thrown in the towel when the opening low from the first 5 minutes broke. But as a team, we seem to really stick with the trade. I know a lot of you guys are in this with me. I was being aggressive personally. I was buying much more heavily today than I have in a few days, and it looked like we nailed it. It looked like we absolutely nailed it. I mean, let's be fair. We did absolutely nail it. I wanted more follow through than this. We're so extended in this market. I almost can't believe we didn't get more follow through. Just having the cues up right now, that rally high that peaked out at 10:30 this morning is at like 271. The 80 MA is still at 277. Like really disappointing that this didn't turn into at least some sort of upside grind or afternoon rally or 15-minute price correction, pivot low continuation. There's a lot more room here for this market to run, and it seems to a degree that the buyers are still on strike, kind of what Brian was saying and Pat was saying, without giving us any follow through. It was just more like a little reverberation bounce off of the selling. I mean, we came into today, and basically what I said in the morning meeting was another red day today is almost like a statistical anomaly. Though in the market, anything can happen and will happen given a big enough of a pool of data. And if you're in the market long enough, you'll see it all happen, I promise. But this sell-off that we've seen coming into today has in some ways been one of the worst sell-offs I think of the entire year of 2022. Definitely up there. There's been a couple that were really bad this year, and I would describe this entire move starting from the CPI high of 410 all the way down to lows today at 378 as one of the worst it's been out there. I mean, they just wrecked this market. It's day 6 this morning. We're gapping down pre-market. We're down a lot more overnight when Japan first came out. And but by the time the market opened, it was still a down open. We just erased a lot of the gap, but it was still a down open. We were looking for red dog reversals, Oldensmith overthrows, 80-20 trades, whatever you want to call them. The trade where you have a market that's very extended to the downside. It's a day 3+, or in this case, a day 6, and of downside action, and you're looking for the break of the previous day's low to come back up. And pretty much everything that we were looking at, and my list was by no means exhaustive. You guys were adding a lot of additional names to the list as well this morning. But pretty much everything that we were looking at, I mean, that trade worked. And I remember when we broke that opening low, because a couple of things gave like that potential RDR thing earlier, like the Qs did, right? Right away, the Qs broke yesterday's low and kind of came back up. You could have been long versus that opening low. That low broke. That low technically failed. Same thing even with the IWM. First bar of the day, it breaks yesterday's low. It comes back up, but this 945 bar broke that low by a little bit. SPYs actually did not do that off the open, but they did do it a little bit later when these kind of tails came in. Apple, we were looking at into this 130. I bought 130 and 1 cent twice down here, once on the 935 bar and I think once on the 945 bar. Apple, there was another one, and this Apple, when it really turned around and broke those highs, it looked like I wanted to this was the weakest one, and it looked like I wanted to kind of wake up and take over for the market a little bit. I mean, so that was one of them. Microsoft was another one when that broke the previous day's low and kind of came back up. The trade desk on the overweight initiation, even that gave you the opportunity. This was probably one of the best ones that there was, actually. That overweight initiation always acts as an extra layer of probability. This is another company that I really like also. Breaks that low, comes right back up off the open. This was probably the easiest one out of everything that was listed. Amazon, that early strength, man. Oh boy, when Amazon, same thing. Broke yesterday's low, snaps back up, and that was one of the strongest off the open. It maintained that relative strength, even though it broke the previous day's low. It's when everything was kind of cratering, snapping all the way back. I mean, this thing looked so good. Looked so good. Did not get to my 88 that I needed. I don't know. I just so disappointed with the lack of follow through post 1035. But we caught all these trades. They all gave big moves. I know everyone got their risk covered, booked a little bit of extra profit beyond that. But my game plan was to be greedy, and I think a lot of you guys are on board with that. It's difficult, right? Because it's definitely counter trend. But it's a day 6 of selling with this degree of extension. I wanted to be greedy for a larger bounce. But what I specifically said was be greedy, don't be stupid, right? Don't be stupid greedy. We have to remember, and I especially said this as we got to highs at 10:30. I was like, we got to remember, guys, that this is a counter trend trade here, and even though there is room for a bounce, I really do think that there's room for the SPYs to bounce to 386, 387. I feel like that's not asking too much when we just dropped from 410 to 478 to give that degree of a retracement. And maybe we do still get that follow through tomorrow, but every day that we spend down here, the lower the probability and the lower the ability of what the bounce can look like. So, tremendous conviction and great job here this morning to really be able to capture that trade in all those names this morning. And I really do think it was the right idea to get the risk covered, make sure that, because it's counter trend trade, make sure that you're in even more than a win-to-win situation, right? Like a win-win situation means that your worst case scenario is 0. With the degree of the move that we got off of those lows, everyone's worst case scenario should be better than 0. It should be that if this trade comes all the way down and fails and stops me out, then I'm still going to make money in it no matter what. That's the position you should be in by the time the market was making its highs at 10:30, but still keeping some. Because if you get the SPY bounce to 386, 387, which I don't think is unreasonable, those positions are just going to continue to pay. And then we get much, much more difficult, I think, into 386 to 388 for the SPYs. And honestly, it's as we start to get into that area, or even as high as a retest of 390, if that could happen, which was a major level that we broke down from, then you begin to look at the other side of the market again. Because we're in a weak market that broke down, you're retesting a major support level, potentially seeing if it holds as resistance, then you would no longer be extended, and then you can sink your teeth better into a pivot high when the market's no longer extended for downside continuation if you're a bear. So again, just great job, I think, this morning. I'm really disappointed on the follow-through. I was up a good amount of P&L at one point this morning. I closed off of my highs for sure, and I was like really thinking that my P&L when it was at its highest could double or triple from where it was, and just didn't get the follow through, and instead gave a little bit back, because that's what happens when you're greedy. But I'm fine with that. I'll do that all day. Give back the percentage of the P&L that I gave to potentially be able to make significantly more. I think that trade was there. We just didn't get the follow through. And I don't know, maybe Tesla's affecting the entire market to some degree. I mean, Tesla does have a big market cap. I know that there was some speculation here in the VTF, and I don't know if it's accurate, though, because I've heard so many different numbers on where the margin call comes in for Elon. But so there was some chatter about 137.50. Again, I've heard a lot of numbers. I know he's restructured the debt on a couple of occasions. He had sold more equity. So I don't know for certain if that 137.50 is the number. It would make some sense to me, especially the way the stock is just seems like it's gravitating down to that spot. Like they want him to have this margin call. But this Tesla was atrocious. It was so weak. We've been saying it here for months that this Tesla's going down on that Twitter buy, and it's really doing it. I still think that the stock is expensive here. But again, the degree of extension is starting to get kind of crazy. Stock's trading at 138, 80 EMAs at 155, 21 EMAs at 170. So, into 140 and below 140, I did a little bit of nibbling. I'm going to keep just a little position overnight, just as a short trade. This is not going to be one that you see me in for months, I don't think. So just a little bit of a trade. If we get the gap up tomorrow, I'll get paid. If it opens flat or down, I'll work the position a little bit, manage my risk, and it won't be the end of the world. And that's it. But I guess at the end of the day, as I sort of see Paul's question out of the corner of my eye, but didn't fully read it, this is not what you want, honestly, if you're bullish. What you want if you're bullish at all is a price correction to the upside. This is not a price correction. This is really more of a time correction, and time corrections are bearish. The more time we spend down here without being able to get that bounce, the more these moving averages are going to catch up, the more the market's not extended, and that's another potential short setup. So I think for the bears out there, if you're looking for those shorts, I don't think that today is a good day to short. I don't think yesterday was a good day to short. I don't think that the day before yesterday was a good day to short. And I know that the market went down for a couple days from the day before yesterday, but just an understanding of how markets work. We don't want to be shorting stocks or markets, or really the SPYs, what we've seen all year. We don't want to be shorting a heavily downside extended SPY when it's $10 plus extended. I don't care if the market continued to go down a little bit further. What you want if you're a bear and maybe you caught this move and you're looking to reshort, or you didn't catch the move, you want a time correction to build out, a bearish consolidation to set you up for continuation, or you want a bounce. You want a price correction into that area that I was mentioning earlier, because that can give you the pivot high. But the more time we spend down here, the more bearish it's going to be. And again, at the end of the day, even though we nailed those today and I was pretty pumped about it, this is not the follow-through that I wanted from a price correction standpoint. There is still the ability for this market to work its way higher over the course of the next couple of days. But again, the more time that goes by, or the more price higher goes by, the more difficult that purchase is. So at the end of the day, though, if anybody's got Amazon off of lows, or Apple off of 130 or something like that, you wanted to get your risk covered, sell even more, probably even take off a little bit more into the close. But I still think, if you got Apple from 130, if you got Amazon from 84.50, 84.75, if you got Google off that hammer that was called out, if you got some Microsoft in that area, which we also were kind of buying into that 239 zone, and you're closing with a $3, a $2.50 profit cushion, or whatever it is in Apple, I do think it's worth it to keep at least a percentage of that to see if we can get a little further upside bounce. But you need to do it from more than a win-win situation, because we're in a bearish market. We could easily be back to Apple 130 tomorrow, and you're getting stopped out of it. But you're getting stopped out of it, and you still made money in it, and that's what we want to do. Because in the lower probability situation, where we do have strong seasonality into the very end of the year that actually begins now. I think some of the seasonality for mid-December actually is usually a little bit more bearish, and the Santa Claus effect actually only begins to occur starting next week. So if you do get a little bit of that seasonality, or whatever it is that creates a bounce, that I'm saying a move to SPY 386 is possible. In theory, you could get a bounce back to 391 if the market wants to do a deeper bounce, and there's been so much volatility in this market. I think the risk reward from a win-win situation, where maybe you can get, again, Apple gives you a bounce back to $137, is very worth it to be keeping some of that stock. And if you get stopped out of it, you still made money. So that's all I got for you guys today, and I'm happy to, like always, answer any questions. From Bright, could the market turn out to be like the reversal seen in June this year? Let me remind myself on June. The reversal. So there's two reversals here. I don't know if you mean the reversal down or the reversal up, because we had this. June was crazy. We had this insane peak. Then we had CPI, I think, on this day, and the Fed on this day, and they sold us into it, sold us down more on the CPI, sold us more on the Fed. I mean, this down move was insane. And then that was the bottom in June. That was the bottom for a massive summer rally that we were able to capture because of, once again, an understanding of all of our market dynamics and everything else that we're looking at. So could you compare the current market with the June gap down reversal? I'm assuming that I'm still not sure which one you're actually referring to. When you say gap down reversal, I'm assuming you're meaning the reversal up. I don't know. There are some similarities with that price action, and there are some differences. I mean, this was also like post CPI, but this was a hot CPI, and then the Fed did nothing to help. That led to this sell-off. I think that the only similarities here are kind of the degree of extension situation that we're looking at. So, could we reverse back up? I guess we could. I don't see any catalyst for that at the moment outside of some of that seasonality. Let's take it one step at a time. let's start with seeing if we can even get a price retracement up. If we can get a price retracement back, let's give a little bit of a more bullish situation. We get a price correction to 388 to 390 in the SPYs, retesting that level. You reject off that level and you pull back down. Then you create a higher low into like 385 and then break 390. I think that's almost what you would need to actually reverse up. So that's going to be more of a process than than just I think just like a V bottom where we're going straight back up to 400. So let's take it one step at a time. Again, put yourself in the win-win situation because you never know. Eventually the market will go back up, that I can promise you. I just have no idea when it'll be. But you have those good executions today. You keep some of it overnight. Even if it's lower probability of a full-out reversal, it's probably very low probability. It's not a zero probability. And if you're in that win-win situation and you're implementing strategies for reward maximization, and we do reverse here, if that were to happen, you can be put in a position to be able to capture that. Thanks for the question, Bright. From Paul. Does not getting the follow-through we were expecting mean that we are more likely to time correct instead of price correct? Yeah, for sure. So today is day one of really a of a time correction. I was really looking for that price correction. Today was more of a time correction. Every day that we stay down here and do what we did today, like honestly, one of the more bearish situations I could think of would be if we had price action exactly like today in this range, ranging from 378 to 383. If we do that for the rest of this week and this ADMA catches up and now we're making a bearish consolidation to set us up for lower. So the time correction is not what you want to see. Today is just like one day of a time correction with a little bit of a price correction. So it's going to be curious to see what happens tomorrow. Tomorrow I would say probably equal probability of another sideways day versus a bounce back day, and still lower probability of today's low breaking. I think that's still going to be a little bit of a lower probability situation tomorrow, but not by a lot. Not by a lot, because the market's just been so weak and so bearish. But I do think that's the lower probability. I think that the higher probability situation is that we still get some degree of further price or time correction to let this ADMA on the daily chart catch up. Hasn't Elon already sold enough Tesla to pay off the Twitter all the Twitter debt? I really don't know, Bright. I stopped following the story as closely as I was once the buyout occurred. I was following that Twitter story very, very closely when the stock was still public. We were trading it. We were looking at it. But now that Twitter's not public, and Twitter's one that I used to trade a lot, I stopped following it as closely. So I don't really know the margin call prices. I don't really know the degree of what he has sold, how much cash he's raised, how much he's put towards it. I really haven't done the research on that. All I can say is the same things that I've been saying, which is if you are a Tesla shareholder, you should be furious about this fiasco. The amount of wealth destruction that Elon is causing with this Twitter idea is ridiculous. I mean, unless you were a Twitter shareholder, in which case it's the opposite. It was not wealth destruction for you. You got paid out at a much higher price than that stock belonged at. Twitter should have been bought for $20 a share, not $54.20 or whatever the heck it was. From Rex. Today I went long Amazon a few times. My first trade was at the open. Okay. Great name selection. I'll start by saying that. My first trade was at the open. Balance on yesterday's close, and I went long. I covered my risk, and I got stopped out on the 940 candle. Okay. I love it. Great job. You got your risk covered. I went long again on the 945 candle. Perfect. When it went below yesterday's low and came up, I got stopped out because Amazon took a new low to 84.33. Okay, let's hold that point for a second. Let me read the rest of your question. Went back through yesterday's low again. I went long and it actually worked that time. When trading in RDR setup, the stock went below yesterday's low and back up. I always get shaken out before the stock actually bounced, or should I not cheat on it? Yeah, that's what I was going to say. not cheat on, I wait for the candle to form. I basically stopped out of everything on the midday pullback. I know you mentioned you don't like to trade in the midday, but is there anything you would look forward to add during midday? Sure. So first of all, great name selection, great job on the first trade that you got stopped out of to be able to be break even in it. And that's my only feedback for you on the trade that you're talking about here. I mean, the trade off of lows back through yesterday's low worked fantastically well. I think that's what we were primarily involved in. It sounds like you jumped the gun a little bit on it. I don't always hate that. I do it. But you really have to have the confidence when you're cheating that, that the probability is on your side, and doing this can give you a better risk reward. And in some cases it makes sense to do that. In other cases it makes sense to wait for the bar to close and actually really know where that low is. In this situation, I don't hate that you did that. You just have to recognize what you're doing, and that you have the potential of getting shaken out when you do that. And that's exactly what it sounds like. You realized that because you got back in when the setup was actually there and the candle closed. So that's totally the right thing to do. Then you caught the trade. If you got stopped out, if you raised your stop to this low here at 10.10 at 84.41, and you got stopped out at 11.10, I love it. I love it. That's the proper mechanics of a trailing stop. This thing pretty much totally fails. It pulls back way, way deeper than it ever should have, and then we ended up getting no follow through on it. So to answer the final part of your question about midday trading, yeah, I really do much less midday. There tends to be much less of a trading advantage midday, so I'm taking it easy midday for the most part. If I'm doing trading midday, it's usually either because an event occurred or because I'm just adding back stock. Not new trades, not adding new risk, but I've got a position on and it gave me a great move and it's having a technical pullback, and I want to just add back the stock that I sold at a higher price to keep the profit difference. That's about it. Otherwise, the midday stuff, unless there's a real event, I mean, today is just another example of it. This midday action for the market, it's just really trash. Really hard to be doing anything in these hours here. From Chi on YouTube, I took Apple today. My game plan was once it trades back through yesterday's low, I love it, of 131.32. Okay. Perfect. So that happened at 9:55 Eastern Time. Take a long position with market cooperation. As I was watching the price action, there were multiple tails in the 5-minute at 9:45, 9:50. Yeah, this is kind of where we were buying. I stuck to the original game plan. I think that's fine. But now in hindsight, buying of those tails with 130 level defended could have been a good trade. But the fact that the indices broke opening lows made me think that those tails can fail. What are thoughts on hammer trades off the lows and back through yesterday's lows? So sure. So a few things I love. I love that you had a game plan and that you stuck to it. It's key to the business. I love that you waited patiently for that, trade back through the previous day's low, and that you followed that game plan. That's a very great trade. I love it. We were looking at this 130 breaking and coming back up. 130 is really important. It's like year lows going back to June for Apple. This 120, this low here was 129.04. So the 130 area is important, but it's an area. The things I did not like about Apple this morning were its relative weakness, for sure. But I think that in order to be buying these tails like you're describing, you had to have the market conviction that the team here had that this bounce needed to happen today. I really did not think that we could get further follow through on the down. I would have been shocked, which wouldn't be the first time in my career I've been shocked. But I would have been shocked if we couldn't bounce today, if we couldn't close green today. And again, the Qs didn't close green today, and I am shocked, but we still did close off of those lows. So when the market was kind of breaking those lows, I was literally yelling into the VTF in a way that I don't typically do, where I was like, guys, I don't care. Today I'm here to make a lot of money or lose a lot of money. It's one of those days. And you almost had to have that kind of conviction at lows. And if you had that kind of conviction with the market on day 6 to the downside, that's kind of what you needed to have to be looking at Apple, which was actually acting relatively weak this morning, and be trying to buy it off that 130 area or back through 130. So I like the trade, but I think that that's a difficult trade. I actually think that your trade is probably the better trade. But by buying that 130 area, you did get a better risk reward, even if it's the more difficult trade. Thanks for the question. What's up, Brandon? How you doing, bud? Anything else, guys? Anything else from today? Happy to review. Going once. Going twice. Sold. All right. Thanks, Mark. All right, guys. Have a great night. Appreciate all of you. If you're watching on the YouTube, you know what to do. Bang on that like button. I appreciate it. It's funny. I've actually noticed that by saying bang on the like button, there's actually more likes. It's kind of. I guess that actually does work when all the cool influencers are all doing it. So bang on the like button. I will see you all tomorrow. Have a great night.